The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of the relationship. It's not up to you to control the other half. Respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We have the Dow Industrials down 36. NASDAQ off 20. S&P's down 7.5. Gold contract catching a bid up $14.30 at $11.92. Silver up 12 cents, $16.59 an ounce. Platinum up $14.50 at $9.23 an ounce. Copper down a penny and a half at $2.64 a pound. Light sweet crude up 79 cents, $46.84 a barrel. Bonds, 10-year note up 14 ticks, 125.21. 30-year bond up 27 ticks, 153.21. King dollar down 171 ticks, 101.375. You have the euro trading at 105, and the yen is at 112.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you got holiday trading last week. Basically a little holiday trading today. Markets will get pretty active tomorrow. So what do we have? S&Ps. S&Ps, the SPY's at 220.90. Your number to keep your eye on, folks, is 219.60. 219.60 is the breakout area from the 23rd of August. We got up and over that number, and we did that on the 22nd. Bottom line, you get a sideways to slightly low movement out here, and I expect that's all we're going to get coming into the close. We take a look at the Dow Industrials. What you have with the Dow Industrials is this. The Dow Industrials right now at the highs. You're down 38 bucks, but basically you're at the highs. Composite, NASDAQ Composite, also at the highs. Composite down 20 bucks, but you get the high up there. Friday was 53.98. Bottom line, if you stay over the 53.42, that's your benchmark coming into the composite. That is on the 22nd of September. Now, this is where it's going to get a little bit interesting. So the NDX 100. Now, the NDX, folks, hasn't been able to make its high as the all the indices have made the high. Well, when I say all the indices, what we're talking about, you had the Dow make a high, you had the composite make a high, you had the S&Ps make a high, and the NDX 100 has not been able to make a high. So it's going to get intriguing here to see, if it can go up and tag the 49.11. 49.11 was the high that was generated out here on the 24th of October. Last week we got to a 48.84. And, realistically, it'll be really unusual that you have four indices up there and it can't tag it. But right now it doesn't look like it's going to tag it. That's the bottom line. Gold contract. What do we have with gold? So gold caught a bid. Gold contract caught a bid, folks. You're up 13 bucks. You have 173,000 contracts. Now, gold's going to need more price spread as well as contract volume. I do expect we're going to be making our way up to the 1,218 level. The real kick is going to be, how do we get there? Are we getting there with strength, or is this a counter trend bounce? just setting up another leg down inside the gold and silver market. My take right now is that it is not a counter trend bounce, and the reason is when you look at the XAU and the HUI, what you had is this. The XAU, as well as the HUI, came, well, first off, did not trade lower last week with the actual metal getting smoked. Bottom line is that it held the lows. It actually came down into the lows that were generated out here on the 11th of November with dramatically lighter volume. So first off, for the XAU, I expect this baby is going to run up into the 85.34 area, and the XAU has been stronger than the Gold Bugs Index. Gold Bugs Index today is up $7.53. You're at 183. Now this also last week, the difference is that the Gold Bugs Index actually got under, made another low, and that was on Thursday. It was with lighter volume, then I rejected it all on Fridays. But bottom line, Gold Bugs Index I expect wants to also run to the 204 level. Bonds, the 10-year notes. Now this 10-year notes and the dollar, folks, are going to be moving this market. My take, the 10-year note and the 30-year note bottomed once again. And if we take a look at this, this is where this is going to get really wild. And what it is that the 30-year and the 10, they haven't broke any major swing points. You know, these things that get smoked, there's no doubt about it. The 10-year went from a price point of 177.11, you know, straight line moved down to 151. Well, you know, the swing point is 147.11. And if you bring this back, what you're going to see, and I can bring it back, oh my God, I can bring it back 30 years. What you're going to see is that from 1999, each and every time, this thing just doesn't break major swing points. It has had vicious pullbacks, but guess what? It still didn't break a swing point this time. So what does that say? That says until you break a major swing point, bottom line, bonds still want higher price. And what that's going to be about, let's go over to King Dollar. What King Dollar is doing, folks, is this. King Dollar broke out last week. We broke out of the 100.66 mark. It very well still can be an ABC structure on the way up to 113. My take is that it's not, and this is why. What has happened since that breakout is that this thing is trying to get back inside the 100.600 area. Last night we made it to 100.675. The way this is set up right now, it looks to me like we're going to be back inside here in the next couple days. Now, if that's what you get, what you'll also see is this. This has been a consolidation since 2015. You break topside. You get a false break topside, well, guess what? When you get a false break topside or down below, and you get a failure, bottom line, you go to the other end of the range. The other end of the range inside the dollar is 91 area. And I expect that'll take 6 to 8 months. So we get a lot of variations happening in this marketplace right now. It's going to be the dollar, and it's going to be bonds that move these markets. Bottom line, though, what I expect you're going to see is we get approximately 22 trading days left to the end of the year. Bottom line, we'll see whether it's sideways until the end of the year, or in fact you're going lower. Because this dollar, to me, wants lower price, and bonds want higher price. Dow Industrials right now down 35. Nasdaq's off 18. S&Ps are off 7. Gold's up 13.20. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 38. You get the NASDAQ off 20. S&Ps are off 7.5. And as we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. And don't forget, folks, at TFNN, every Monday, Wednesday, Friday, we start live programming 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. All that programming you can get right on your cell phone. You go to TFNN.com. Just hit Tiger TV. You're going to get some great HD quality video as well as audio. Steve's got a great show on every trading day, 1 to 2 Eastern Standard Time. Also a great newsletter. It's called Mastering Probability. The way you can test drive is come over to our website at TFNN, go into newsletters, trading newsletters. You can test drive Mastering Probability 30 days absolutely free. Steve Rhodes, what's going on?
Well, it sounds like you made good use of the Thanksgiving holiday to get rid of that cold that you had last week.
I feel like a new person, man. I'm telling you, man. This cold hung on, and it blew my mind. I feel human now, man.
That's great. That's great. Well, you sound human, too.
Oh, man. I'm telling you.
Sometimes these colds can really kick you.
Well, you know what it did? Okay, so check this out, folks, okay? I had started smoking cigars again, okay? Bad scene, right?
Yes,
and I quit. Because you know what I'm thinking? From, smoking cigars, and bottom line, it probably took me longer to get better. And I'm done. I'm freaking done, man.
This can be a tough time of the year, too, to shake a cold because of, all the...
Yeah, well, I blamed it on that, stuff. So it's even better because now that freaking addiction's gone.
Good. Hey, I heard you talking about volume earlier in the Qs. It is an amazing... when you consider that Friday was a shortened trading session...
Right.
Where the Qs did 7 million, and today, right now, we're only at 10.
I know. Yeah.
I know. So it certainly is rejecting that October 24th swing point, the bottom. So I know you're thinking that it'll find some way to get up and test the top of that. But boy, what a light volume trading session today. Inside of arguably where the strength is inside the market. So maybe that's a little bit of a tell as to what is coming out here. I use my Thanksgiving time to dust off one of my many books as I was just sitting around watching some football, and Marty Zweig's Winning on Wall Street. And I've got a bunch of other things that I printed out over time that take a look at a number of different indicators that he uses, and you can combine 5 different indicators to create his what he liked to refer to as his supermodel. And Tom, those 5 were the prime rate indicator, the Fed indicator model that he's created, installment debt, monetary model. So all financial aspects here that that he believed went into longer term because he's really a longer term trader. So intermediate time to longer term. And then he also used this 4% model. Now, the 4% model is something very easy for all of our listeners to actually plot on their chart. Some people may have an actual tool that can do this on their charting system. It's typically called a rate of change. Now, in Marty Zweig's 4% model, he's looking at, as I mentioned, he's an intermediate term type timer, and he was always looking at weekly data out here. So this chart for the New York Stock Exchange, he was always trying to find the broadest stock exchange. So you could use the Wilshire 5000, the New York Stock Exchange, maybe the NASDAQ Composite would be really the three best indices today versus using the Dow, even the S&P 500 or the NDX 100. And what he was looking for was rates of change week to week that either exceeded positive 4% or less than a negative 4%. And whenever he saw one of those from an intermediate time frame, they marked either buy or sell signals. Now, the arrows that are on my chart, the red arrows represent a negative 4%. The blue arrows represent a positive 4%. And you would stay with the trade until the next reversal came. So once you got a short signal, you would stay short until you received a bullish signal, and vice versa out there. In choppy markets, it can be a problem. Just using it as is, as the only indicator or tool, I don't believe works as well as, and I've referred to this on the show several times, the oscillator unchanged line, which subscribers have access to a video of, and that's the red line now that shows up on the chart. Now, interestingly enough, with regard to where we're at, a few weeks ago, we received another one of his 4% buy signals. When price is above, this is a weekly chart, when price is above that oscillator unchanged line, it is really just a double confirmation long term. That means that in the New York Stock Exchange, which is the chart that we're looking at, the 10,729 area on any pullback should be very strong support out here. He also created, I mentioned this super model, which took these 5 components and combined them into one to also give signals as to long term, whether you should be invested in the market, what percentage should be invested, whether it's 50% or 65 or 80 or 100% fully invested inside of the market. Now, interestingly enough, when I went ahead and plotted all this, it really didn't pick up on the 2008 move to the downside. But when I went ahead and took this model and integrated my oscillator unchanged line, again, that's the red line that we're looking at, and now this is a monthly chart. So the previous 4% model, we were looking at weekly data. Now we've switched to monthly data because he's a longer-term type trader out here. When you combine this with my oscillator and change line, it gives extraordinary results for just additional signals, whether to be long, whether to be short, and what percentage of your, let's say, your retirement funds portfolio should be fully invested and so forth. So great book, a great set of tools out there. I also on the show from time to time use this indicator, which is the Zweig breadth thrust indicator, which gives really nice long signals out here. And what this requires is it really requires the advanced decline data to get below this. In this bottom panel of my chart, there's a blue line at the bottom. And anytime that moves mathematically below 0.40, it gives us an indication of a potential oversold market. You're looking for the next turn to the upside. And when this indicator turns the upside, if within 10 days it gets above the 0.615, you didn't use the 0.618 level, you have a confirmed significant change in trend. Obviously, it's a late change in trend because the change would have occurred likely 10 days earlier out there, but it gives you nice long signals. Now, we don't have one of those that's in place. Even with this big, strong move that we've had in the market, we don't have a thrust signal out here. That doesn't mean that the New York Stock Exchange is not bullish. If we take a look at a low volume market, which we know we've had, I like to take a look at volume inside of the New York Stock Exchange, advancing volume, and then divide that by the advancing and declining volume. That gives me this oscillator at the very bottom, which has been able to make new all-time highs. I don't have today's data in there, but it's been able, so it is really confirming a move higher into the rest of the season, which I'll call through the early part of January. That's also confirmed by the daily advanced decline data, which was able to get above this plus 150 level out here. And this is using the oscillator, which is the difference between the 19 and the 39-day advanced decline data. That's what's in this center portion of my screen. Anytime you get above 150, it's really the initiation to higher prices to come. But in the end, it really confirms the annual cycle, which you and I have taken a look at. But in the meantime here, what we're going to take a look at is I believe we're looking at a pullback, a retracement. Maybe just for a few days out here. I believe it has already started. I think it will continue overnight. I like the rejection inside the Qs with light volume. And that says that, hey, look, even the New York Stock Exchange, nothing wrong with it to pull back to about the 10,750 to 10,60, 10,635 area. And then it's north. It's north to the North Pole through the rest of the year out there. As you say, about 22 trading days.
Folks, come over to our website at TFNN. Go into newsletters, go into trading newsletters. You're going to see Mastering Probability. Test drive it right here, right now. 30 days, absolutely free. Steve, thanks so much, man. Look forward to the show tomorrow.
Take care, bye.
Have a great one. Bye-bye. Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 50. You get the Nasdaq off 26. S&Ps are off 10.5. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Hey, Tom. Glad to hear you're feeling better.
Thank you. Yeah, it feels great, man. Totally.
Well, yesterday I'm in Michael's stores. We did a 1,000-piece puzzle over the weekend, and I wanted to get some glue to frame it.
Okay.
And I'd never really been in their store.
Oh.
They were packed. They were packed. They were doing business. Would you look to stop? Would you look at the symbol MIK?
Absolutely. Let's take a look at it. Okay, this is Michael's great store. They have everything too. You want to make anything, folks? Anything and everything. They have it, and they're not inexpensive, but they're not really expensive either. But you get everything and anything. So the low is $19. The high is 31. The PE is $13. Okay.
Where's the A point? I can't figure it out. I'm looking at the daily chart. I can't figure it out.
I'm just going to put this on a weekly first, okay? And the reason is that you had quite a retracement here. So we've just come down from like 31, all right? You get down into 21. And like this counter trend, this looks to me like just a counter trend bounce at this point, but 26.10 is game, which is not that much higher than where you are. Okay, so now the question is this an ABC up? Which it looks like it is a small ABC up. So what you do, Larry, you just take the lowest low, really. You know, I mean, in this, it's an art more than a science, right? I mean, you can take the straight line move, and that'd be like, okay, so is that 2181 or at the very bottom 2172? I mean, that's so. Let's just say we take the bottom right now. Well, actually, let's not take take the bottom 2172. So you get 2172, and then now what does happen is this: these tops, like, okay, what's the B? Is the B the first high, which is 2468, or the second? What I do is this: I take the smaller one. And the reason being is that that'd be a more conservative way of doing it. You see what I'm saying? So that you're not looking for a larger number. You're looking for a smaller number. That's what you're kind of doing. So 2468. So you get approximately, what, $3, $2.97. And then if we're taking this one, right, then you're going to be taking the C point is 2380. So what did I say? 3 points, right? So that's 2680. And 2680, now this is where this gets pretty cool. You see this 2610 up here?
Uh-huh.
That's where it's going to hit some flack because this thing gapped down with some juice, man.
Yeah.
You know, but hey, listen, it's not a bad setup, man. It's not a bad setup at all.
Let me ask you another question. When it comes to retail stocks, okay, and usually the fourth quarter always is the best for retail, okay? What's the feeling on retail stocks as far as buying them versus quarters?
Okay, so yeah, there is only one question there, but inside of that one question, retail right now is toast because the internet is taking them south. So what you have is that like this Black Friday, we're not even going to know what Black Friday is in the next couple of years. Give it 3 more years. There's not even going to be a Black Friday. Because the internet's taking everything over. This Black Friday was one of the slowest that was out there, okay? Now, that being said, Michael's is a bit different because what happens with Michael's, folks, if you haven't been in there, this is a craft store. And bottom line is that when people, kids, anyone and everyone that's making something, guess what? You take the ride to Michael's store just like you did with your kids probably or your family, and, you're getting something, right? So it's not like you're jumping on Amazon immediately and say, I need this, this, and this. You want to feel it and taste it, and not taste it, but feel it and texture it, right?
Well, the majority of the things that they were selling yesterday were Christmas items.
Okay, yeah, and you're making something most of the time, right? That's kind of exactly. So, this store is a little bit different. Now, do people make a lot? It's hard to tell. I wouldn't be trading off of that. That's the real bottom line,
Right. Okay. Well, thanks for the good info. I'm glad you're feeling better.
Okay, man. Have a great one, man. Have a safe one.
You too.
Let's go to Rick in Natick. Hey, Rick, what's going on?
Hey, Tom. Thank you for picking up my call so quick. I have a 10-minute break. Listen, I want to see Macy's, please.
Macy's. Okay, so let's take a look at Macy's. Macy's trading at $43.16. And let's see what we got here. Yeah, I wouldn't be buying this.
No, I just sold it today. So tell me what would be the entry point.
Okay, so Macy's, went from a price point of $73 down to 31.
29 actually.
Okay, 29. It came up to ICE. Now, ICE and Macy's is approximately even actually $48. That's where it really broke down, November of 2015.
Right.
It came up to that area with dramatically lighter volume. We come up with 19 million shares versus the downdraft of 90 million. 90 million? Yeah, 91 million. So what I would do is that, if it can get back inside, get down into this 36.75 again, it backs in with light volume, then yeah, this will probably bounce along. This could bounce along this bottom for like a couple years, man.
Really?
Yeah. You know, because the stock. Yeah, let me just see how bad this is. Yeah, you be careful with this, man, because with this, what's going on actually. So this is the first leg down. This stock wants lower price. So when I put this on a monthly, this is a false break. If you want to see a false break topside, Macy's is a perfect situation. Breaks out in 2013, comes back in viciously in November. That's setting up that Macy's wants to run down to $17.49, man. But you could trade it in alongside for a month, 2 months or something.
Okay.
But that high volume low right there wants to get tested, and then where it looks like it wants to go to the highs of 2008. And as I was just talking with Larry there, they got to figure, all these retailers have to figure something out. How are you going to sell clothes cheaper? And it's pretty hard to do when everything gets delivered for free and people are tired of buying junk, basically. So.
Thank you very much.
And they got to pay a rent. Okay, man. Have a great one. Have a safe one. 877-927-6648. So the Black Friday, folks, okay? Bottom line is that Black Friday didn't hit that like they normally hit inside these retail stores. Bottom line, the lines weren't there. We'll see the numbers. The numbers weren't there. Next couple of days, I expect we're going to see the numbers. But what it is that the internet and the mobiles have overtaken this whole deal. And I expect you're going to see it more, because the bottom line is that you can buy the same amount of merchandise without moving. And, guess what? If you do want to, go out and do it for entertainment, God bless you. Let's go to Andre in Houston. Hey, Andre, what's going on?
Hey, Tommy, how you doing?
I'm doing great, man. Yourself?
Pretty good.
Good.
I was seeing if you can help me to understand the IWM chart on the monthly. I'm not behind my computer.
Okay.
I've been looking at it for about 2 weeks, and I was trying to understand because it looks like that could actually be ABC up.
It could be. Yeah, it could be, man. You stay right there. We'll be coming right back. Our phone number is 877-927-6648. We're going to be tackling Andre from Houston. We're going to be talking about the small caps and the structure on a monthly chart. Dow right now is down 48. Nasdaq's off 26. S&Ps are off 9.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is up down 55. Nasdaq's off 29. S&Ps are off 11. And let's go over and take a look at this IWM on the monthly chart for Andre. Yeah, this gets really intriguing, man. It definitely...
The thing I'm thinking of is the small caps, usually when you go through a correction, those are usually like the first one to kind of show strength off of a bottom when we're correcting. Then I'm trying to listen to Bloomberg to get a good picture. They keep talking about inflation, meaning the dollar's going to be strong. But if the dollar's going to be strong, if we get small caps, which is stationed here in the United States, they would benefit. The international companies across the border, it would hurt them because of the currency conversion situation. So I'm just trying to put it together along with the technical analysis. Is it making any sense at all, or?
Yeah, no. Listen, the mantra out here, everyone's saying the same thing. You know, like, yeah, the small caps are going to go because guess what? You know, we're going to have trade wars, basically. You know what I mean? You know, technically, on a monthly basis, you're taking out the 129.10. You're taking it out with volume. You know, bottom line, you know, we'll see whether it can stay over the 129.10. Because if that's the case, what you have here, it's a close call, man. Because, see, what you have is this. The month of October of 2014, you did 1.4 billion. Then you failed actually the highs in June with 600 million. But then you came down also with 1 billion. Now, the definition of an ABC structure on the way up is that you go up with volume, you pull back with lighter volume, and you go up with volume. Now, in this particular case, we pulled back and had volume on the pullback. That being said, guess what, folks? We took out this B point with volume. So it's like, okay, man, what are you? You know, so, you know, bottom line, I wouldn't be short the small caps right now. You know, if you shot on, you know, day trade a couple days, it's looking pretty good right now because it looks like the IWM wants to pull back to 127.72 right now. Because see, what's interesting here today, folks, is this. The small caps are pulling back with some volume today, where the whole rest of the market's not. So your first leg would probably be 130.26, which is the high of the 14th. But if that's pulling back in with volume, that's going to end up being a, you know, false break topside also. You know? So when you get something that has divergence, well, here, let me do this. Hold on 1 second. See, I don't have the, if we actually go over to indice, let me see what the indice looks like. What I just had done, folks, is that I had pulled up the IWM. Now what we want to do is actually pull up the small cap, the indice itself, and see where we stand. So the oh, this is cool. Okay, 1 second. Hold it. 6.8. Okay, so hey, check this out. So 1295.88, which is the Russell 2000. We don't have the volume yet on the break, and we might. We got plenty of. Actually, we only have a couple days. It's going to need, okay, we're at 6.8 billion, and you're at 5.4 billion. Yeah, hey, 1 second. Let me see what this is doing per day, or just around. Yeah, so this would be saying 280 million a day. That's saying you're not going to get the volume, man, going over it. Now, on the actual indice, yeah. What I would do is this, though. This is what ends up happening. Now, watch what happens on a monthly basis, folks. What you have to do, what I do when something comes this close, Andre, you have to actually break it down. What you want to do is this. Go back to June 30th, see how many trading days are in the month. Use this month, see how many trading days are in the month. Break it down so that you're doing apples to apples. That's what you have to do, because what happens, folks, is that your average is 21 trading days a month. Sometimes you have 22. Because we're talking with Thanksgiving and we're talking a half a day, you have to back those numbers down, okay, and add that volume in. So the way that I do it, you'd add up the volume, you divide by the number of days that you're out here, and then this month you'd have to add volume back in and then see what you get. Okay?
Okay. I got you. Appreciate you, man.
I know. Little work. It's fun, though. It's fun also. It really is. So that you can see, and if you do that consistently, you're going to see that it works, man. I mean, it's consistent enough. That's what it comes down to. If you what does happen on this correlation here, though, because of the way that we come down, when you have to think about either an ABC, up or down, or is it in an ABC and there's too much thought process, I say it's not. That's kind of, because you shouldn't have to think about the way that the out of time of the trade works, it's very clear. You either have volume or you don't have volume. When it's a toss-up, guess what? It's divergence. And then you got to basically look at something else. And there's something else that I would look at in this case is that when you were talking about Bloomberg and everyone's talking about the dollar's going to the moon, well, guess what? If this dollar fails 100.660, you're going to see some volatility in this market that's going to blow minds, because it looks like everyone went to one side of the market. And I can show you what did happen also, folks, is this. If I switch gears for a second from the dollar to the gold, everyone switched on the gold. This was the most selling that was done since 2013, and guess what? And then gold takes off. That's what markets do, because it's cleaned out now. So if you get a cleaned out low, which looks to me like happened in gold, because there was more selling in the GLD than there has been since 2016, and guess what? The equities decided that I'm going to take off topside, and now the gold took off topside. So, excuse me, that's what I'd put together with that good old IWM, brother.
Okay. I appreciate you.
Have a great one, man. Have a safe one.
You too.
Let's go over and take a look at inside the inside the Dow. It's strong versus the weakness. The strength out here today is Verizon. That's up $1. McDonald's is up 1%, rather. McDonald's is up 0.8%. IBM is up 0.6. Taken away from it is Visa is down 1.1%. Nike's off 1%. American Express is down 0.9. Inside the NDX 100, what you have is Cognizant Technology is up 6.7%. NetEase is up 1.9%. Baidu is up 1.5%. Taken away from it, Mattel is down 2.6%. Vodafone's off 2.5%. INCY is off 2.4%. And Liberty Financial is down 2.4%. We go over to the biotechs. We take a look at the IBB. IBB pulling back light volume. You're at $4.85 to the negative. This is the IBB, folks, is making its way back into the gap, where it gapped up from November 8th to November 9th. The bottom of that gap is $276.07. We hit $279 today. Last Thursday, you did get into the gap. This thing is going to go fill up that gap. So I wouldn't be going along the good old IBB anytime long. I'd let it finish building some cause to get down into and filling up that gap. If we take a look at some of the higher volume stocks in this low volume market, you have Bank of America down 59 cents. You have Citigroup off $1.24. This will be interesting. Let me go into these financials. These financials get twisted around too. Yeah, guess what? There's no volume in the market. These financials are, kicking in some volume too. Interesting. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 60. Nasdaq's off 32. S&Ps are down 12.5. The S&P's got some sell in it. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 59. You get the Nasdaq off 32. S&Ps are off 12. Let's go take a look at the SPY and see what we have happening here. So the SPY is trading at down a $1.09, 57 million shares. That has a slight expansion of volume too. Let's this is we just broke a small. The last one we were just talking with Andre there. That last 10-minute bar that broke that little swing point at 220.66 with volume. You know, so bottom line, the SPY wants to make its way down to 219.75. The NDX 100, what you have with the 3 Qs. 3 Qs, what they did, and this is where this gets really wild, okay? So watch, this is where harmony actually comes in. So you get a slight expansion of volume in the SPY on the way down. The Qs, folks, actually tried to get to a higher high, and the volume died on the vine. Last week, the high was $119.19. We made $119.08. We did that with 11.7 million. We got 5 minutes left in the marketplace. That was coming into 18.8 million. So you can see there are no buyers in the NDX 100 stocks. This is pretty intense because the NDX 100, of course, that is the the tech area in a huge way. It's not all tech, but quite a bit of tech. Bottom line is that they're shying away from it. So the bottom of this consolidation inside the Q is at 113.63. And as we were just talking, the IWM is getting some juice on the way down. The IWM has done 29 million shares. We made a high last week. Of course, Friday was a half day, but you made the high with 13.3 million. You can, kick that up to 26 million. Bottom line, still pushed it higher. It's the IWM will tell us quite a bit how we trade into the $130.26. That's $2 down from where we are. That area is the last time where we had big volume as this broke topside on the 9th, 10th, 11th, and 12th, and 14th. 9th, 10th, 11th, and 14th of November. Those are big days, fast, furious days, all of the above. Bottom line is that we'll see whether we actually do break back inside of it. If we go over to the yen for a second, we take a look at the yen. These are for all you gold traders out here. The yen's trading at $1.12, and this baby also looks like that this wants to get into lower price. The price of last night in the middle of the night got down to the 111.36 area, and that's what got gold going. If you were out there trading last night, you saw that yen was basically going downtown. As that was going downtown, you had the good old gold contract going uptown, and it looks to me like we're going to have some of that action coming on tonight too, because right now what you have is that gold is building cause to get up into this 1197 area. Now, it's going to need a lot more volume because that's where we got come down. We come down hard from 1208 on the 23rd. We went from 1208 down to 1288 in 30 minutes, folks. So it's building cause, though. It's if you're a bull, this is what you like to see. You like to see build cause right into the bar, and we are already $4 into that bar. So $4 is not enough to get up to the top of the bar, but if this baby gets up into the, give it another $4. You get up into $8, then you're talking. Then you're talking that this will make a run for the top of the bar, which is 1207. And if you get that type of run quickly, what we will see is that you'll see the kick up in volume. We definitely got the price spread in some of these gold and silvers out here today. What I do want to see on the follow through, though, is a lot more volume coming at you. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back with some numbers for you. Dow Industrials right now down 54. Nasdaq's off 30. S&Ps are off 11.5. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We get Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
Yourself?
Oh, very well, thank you.
That's awesome,
man. Thank you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action, is not about attaining knowledge. Market-wise, let's take a look at it out here. We had the Dow Industrials down 54, NASDAQ down 30, S&P's off 11, gold contract up $14.20, trading at $1,192.50 an ounce. Silver up 12 cents at $16.59 an ounce. Platinum up 15 bucks, $9.23 an ounce. Copper off 2 pennies at $2.65 a pound. Light sweet crude up 82 cents, trading at $46.89 a barrel. Notes, you had the 10-year note up 16 ticks, 125.22. 30-year bond up almost a full point, 153.25. King dollar down 256 ticks, trading at 101.290. The euro is at 106, and the yen's trading at $1.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you get a sideways to flat market out here today. The SPY is down 98 cents. You're trading at 220.54. Your benchmark on this, folks, is approximately a buck lower. It's 219.60. The 219.60 area is where we broke out on the we broke out last week, but that is the high of the 23rd of August. Now, what you did have out here is this. You know, we don't have much volume in the marketplace. We did 868 million today in the NYSE. Did 1.6 in the NASDAQ. Bottom line, though, you know, this is subtle, but you had a little expansion of volume as we come into a lower price out here. You know, well, we did 68 million shares. Last week, guess what? You're hitting highs with 56 million shares. You're hitting highs with 67 million. So bottom line, we'll see what this brings tomorrow. What would be really unusual is that window dressing starts in full force tomorrow, folks. You know, you get the last 2 days of the month, following 2 days of the first of the month. So if we come down with volume tomorrow, we're going to have window smashing instead of window dressing. Which would be very unusual, by the way. But bottom line, guess what? We're going to know very quickly because we're right next to this breakout area of that 219.60. We take a look at the Dow Industrials. What you have with the Dow is this: Dow Industrials sideways move at its highs. Bottom line, Dow has a lot further to go down to basically get into the lower range. You're talking about we're at 19,097. That would have to get down about 400 points, 18,668. The composite, NASDAQ composite, also is at highs. Excuse me, folks. Composite was down 30 bucks today. The number to keep your eye on the composite is 53.42. So you know it's 26 points down from where we are right now. What we do have is this. Here, let's do the Russell 2000 first, because the Russell also came down with some juice. Russell is way above its highs, however, but bottom line, this Russell moves around violently. So we came down 18 bucks today. You're at 13.29, and the number that we're going to be looking at in the Russell is 12.95. So that's got about another 34 points to get back inside the lower range. What hasn't broke out yet, and it looks to me like it's just not going to happen, is the NDX 100. The NDX 100, bottom line, is down 12 bucks. You're trading at 48.57. The highs that was trying to get into is 49.11. And we hit a price point last week of 48.84, and that's it. So bottom line is we go, and if you want to see some harmony, this is harmony just the opposite way, meaning the Qs did no volume, very, very light volume, 13 million. And what the Qs were doing, though, they weren't backing down. They were trying to get into a high. So that correlation there is in harmony with the way the SPY went lower, how the Russell went lower, how the IWM went lower. So bottom line is that, right now it looks to me like this consolidation is on inside the Qs. And what that would mean is that you can have game down into the price point of, let's see, the bottom of this consolidation is 113.63. Gold, what do we have with the gold contracts? So gold caught a bid. You're at 1192. You did 1.7 million contracts. Now, gold's going to need follow through here, and I do expect you're going to get it too. And the reason is that when we go over to the dollar, I'm going to show you inside the dollar. Right now, what you have is that we are at 1192.30. The number that gold has to get inside of is 1218.70. And of course, the real kicker here is that, is this a counter trend bounce because of the way that gold came down, or is in fact making a bottom? We'll find out soon enough. My take is that it's making a bottom, and the main reason is the way that the XAU and the HUI traded last week. You had gold making lower lows, but yet what you didn't have is the XAU and the HUI getting destroyed. In both cases, they, particularly the XAU. The XAU held its low from the prior week, had much lighter volume, and the XAU is trading at 81.69, and the XAU just got back inside its higher range today. So the XAU wants to make a run up to 92.36. Now, the Gold Bugs Index had a good day out here today. That being said, the Gold Bugs Index has a long way to go before it gets back inside its higher range. The Gold Bugs Index right now is at $183.80. You're up $8. This baby has to get up into the 194.75. It can do it. It can do it real easy. $8 today. The difference is that the Gold Bugs Index does move in increments of 8, 10, 12 pretty easily. And what that's all about is this. Let's go over to the bond first. So the 10-year note looks to me that it's off the bottom. The dollar looks like it's going to fail to me, folks. So let's do it the 10-year bond note first. The note did 2.4 million contracts. Bottom line, that's good contract volume. We'll see how it handles. We're at 125.22. 6 ticks above this is really important. You get into that with strength, guess what? This bond can be making a bottom. And good old King Dollar. King Dollar is the number. It's going to be the number tonight. And this is what it is. King Dollar hit 100.675 last night. The benchmark is 100.600. You get back inside that, that's going to be a failure of a breakout. Right back. Stay right there, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials trade down 54, NASDAQ off 30, S&P's down 10. Gold up $14. And if we go take a look at the XLF, so let's take a look at some of these banks first. So XLF, folks, bottom line, been on a tear. On November 4th, XLF's at $19.40. Bottom line, straight line move after the election to $22.32. Now, that being said, this is what you have, okay? So you hang at the highs, dramatically light volume. We get a little expansion of volume today, and what it did is actually it got into the 22.32 area. So tomorrow's going to be a big day in this XLF because bottom line is that we'll see whether they get an expansion of volume. It looks like it wants to trade down to the 21.70 area. That's on the dailies. We can take a look at the dailies. When you do pick up these monthlies, you're definitely coming into some flack here, but we came into flack with big volume, so it'll be really surprising if, in fact, the XLF can't get more traction. That's kind of how it's set up right now. But guess what? You go down. If it pulls back into that area with volume, then that's going to be another failure. This will be a major failure too, because this is what would be happening here, is that the amount of folks that actually moved into this XLF are huge. I mean huge. There's no two ways about it. It's still coming into the flack that was left over. However, from 2007, from 2007 on down, that's exactly where it's heading into. Let's go to Brent in Martinez, California. Hey, Brent, what's going on, brother?
Tom, how are you, my man?
Doing great, man. Yourself?
How's your Thanksgiving?
It was fabulous. Lots of good food, lots of fun, lots of people. All the above.
Likewise.
I love it. You know what I absolutely love, folks? I'm sure we all do. It's eating all the food afterwards. the following day. Yeah. Totally. The following day. Particularly, because when you're cooking, I cook too. Bridget and I, we both cook, so we cook for a lot of people. So it's always nice the next day just getting up, eating without a lot of work,
I know I'm lucky. My wife, Leanne's a very good cook, and then both my sons that are in their 20s, they're actually excellent cooks too. And my son Troy made a completely scratch pumpkin pie.
Sweet.
Filling, crust, everything.
Yeah.
And then my son Shane made the stuffing, and he roasts the herbs and everything. It was pretty awesome.
That's awesome, man.
I'm lucky to.
I'm starving right now. I want a turkey sandwich right now. Nico will kill me eating that bread.
So I was calling about it. Last week I was accumulating some of the gold stocks and the GDX and just various things, options on some stuff. I've actually bought shares of Randgold Resources.
Okay.
And the reason I did that, looking at the on kind of longer term daily, from that high it put in, I think it was around 126, and then in that recent low it just put in last week.
Yes.
There was very, very symmetrical chart. So there was 9 weeks for the A to B leg, and then 9 weeks for the C to D leg. And then if you take the whole run up from the low that it put in last year,
yes,
to that high that put in this year is a 786.
Is it?
There's
Okay.
a few things there that I liked about it. And so I just wanted to have you take a look and see what you think.
So let's take a look at it. Now, this stock here, folks, is so cool. Now, this is, the symbol's GOLD, and it's Randgold Resources. Now, I didn't buy this morning, and it's a killer. What happens, folks, is this. This stock has proved to be the strongest gold stock. You know, we're going on, let's see, 8? Yeah, we're going on 8 years now. And, you know, when it gets smoked like all the rest of the gold stocks, okay? And you know, it's been in a huge consolidation. The top of it's 127, the bottom it's 60. Well, and it's been in this consolidation, you know, going all the way back to August of 09, or December of 09. And, you know, I was watching it today, Brent, and I says, look at that thing, it's taking off again, man. Because what happens, folks, is this when this thing takes off, and it, you know, this is a great indication that the actual gold market is going to continue higher. You know, because Randgold itself, when that baby starts taking off, man, it doesn't have a lot. Let me see how many shares it has. So, yeah, it only has 93 million shares. And the funds love this stock, folks, because this stock is a clean stock, makes a lot of money, all of the above. Yeah, I think you get some real action here, man. I mean, you know, it had it happening today. You're at 74. I mean, the next stop here is $77. And if you make it through 77, you're going to get up to 90.
Yeah, it's something I'm hoping to hold on to. I got in at 70.92 was my buy-in, so I'm hoping that I can.
Yeah.
Yeah, I would like to kind of stick with it. And
this is an equity. You know, my take right now, folks, on the gold and metals anyway. And if you haven't test drove the gold report, go do it right now, okay? Because let me tell you something. My take right now that this is going to be a real run. Where my head is with this whole deal is if dollar's going to fail, man. I mean, I could taste it. Last night I was watching this dollar trade. I was watching the yen trade. This dollar doesn't look like it wants to hold. You know, so.
I was watching it with you, Tom.
Yeah, I mean, it was.
I'm in the same boat with you.
And what it did, folks, this is what's so wild about it. The number is 100.600. And it gets to 100.675, but guess what? It did it with some force, man. I mean, it hit that thing, you know, right about 9:30 last night because I was doing the gold report, and it hit it with force, man. I mean, you know, so it's like, okay, it's going to try to make it again. And on a contrarian type of well, not even a contrary, you know, it'll be contrary to what you're hearing in the press, that, oh, you know, great, the dollar's going to be worth a fortune and all that. Well, guess what? Fundamentally, folks, if we get in a trade war, the dollar's not worth a fortune. The dollar's going to be toast. Because in a trade war, guess what? The dollar's not going to be good outside the country. It's going to be good, but it's not going to be like when the dollar, you know, just trades on a continual basis and you can get as many goods as you want. If there's a trade war that actually starts happening, it's trouble, you know, so. And then not only that, what you do have inside the dollar is this. So that's on a fundamental basis. On a technical basis, what you have is that this consolidation has been out here since March of 2015. And the symbol, the way that it's set up right now, it's almost like a tri-star doji at the top, man. So all this has to do is give it up tonight. If it gives it up tonight, guess what? They'll stay in the consolidation. It'll take another 6 months, 8 months to get down to the bottom of the consolidation, and It's not a big deal. The dollar will still be strong. It'll be at 91, but it won't be at $1.13. So I think we get action, brother.
It's pretty crazy how some of these numbers are hit. The GDX, the low was 2013, and it came back and tested and went to 2014. It's like within a penny of the.
These, okay, as Brent is saying, folks, the gold and silvers, okay, they tested, and they were testing some real strength, and they tested on a lot lighter volume, man. I mean, I love how they tested, man. It's just. Now they got to prove themselves, though. There's no doubt about that. They got to prove themselves. Cooking, brother.
Thank you very much, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the XLE, the energy sector. Well, first, let's actually go into the oil market. So last 4 days, folks, this oil market has had quite a ride. Today, you're up 1.8%, or 86 cents. The market itself, there we go. Okay, so you had a high last week of 49.20. We had a low overnight of 45 bucks. And bottom line is that this low, you have some juice on this low. So even though you're up 87 cents, this oil market looks to me like it still wants lower price. Technically, fundamentally, what you have is that There's a million headlines that are coming. Well, there's hundreds of headlines. Let's put it this way, that are coming across the terminal. This one here: OPEC officials failed on Monday to bridge the differences on an agreement to cut production and revive oil prices following comments from Saudi Arabia that output curbs aren't essential. So, bottom line is that these guys, meaning Saudi Arabia, the Middle East, Russia, Iran, have been trying to make deals forever. Bottom line, I don't remember a deal in the last 20 years. There may have been one, but each and every time, bottom line, it's always fluff. And so, you don't get a production deal. Guess what? That's going to be lower oil prices. We go over and we take a look at the XLE. This is what you have inside the XLE right now. This came back $1 and 1. You had 18 million shares on the way back in, and let me see, you're at 71. This is amazing. You're at 71.71. This is going to be a false break topside. Now check this out. This is pretty cool, folks. This is amazing, actually. Okay, so let me bring this back further. So the XLE breaks out. We break out on, it's going to be the same, the November 9th rally. Breaks topside. As you break topside, you make a high last week. We make the high with 11 million shares, with 16 million shares, with 16 million shares. We break topside with 16 million. If you want to see a classic here, this is one of them. Meaning, okay, so 71.94. There it is. So the break, 71. So the break was on November 16th. We break the high. We break that high with 16 million. We stay up above it for 4 days. We're above it on the open this morning, and we give it up. Now, as we give it up, folks, you have an expansion of volume when, in fact, in the market, we have a contraction of volume. That says everything right there. This is a great example of what happens when you get a false break. Because if you combine the price action with the volume, you're going to see two different things. We broke higher, and you broke higher with lighter volume. You stayed up with lighter volume, and then when you broke back inside it, what ended up happening? You get expansion of volume. So the way this is set up now, the XLE, you're at 71.71. Your next level down would bring you to the highs of the 28th of September, which is 69.88. And guess what? That's only the beginning, because let's put this on a weekly. Because when you break a consolidation and you get a false breakout, you're going to go to the bottom of this consolidation, which is 64.57, and you can go lower. So bottom line, XOM, let's go take a look at XOM and Chevron. These are the two largest weightings. Yeah, see, ExxonMobil never made it above its high anyway. Exxon never made it above ICE, which was done in July. Exxon is at 86.47. And that is the largest weighting structure. Chevron did make it. Chevron broke out. But just as Chevron broke out of the $107.58, guess what? This is coming off this high with some volume. So tomorrow, Chevron will tell us quite a bit. But it looks like Chevron's going to make a run to go back inside the $107.58 level. Big heads up. Some of the commodities out here today, what you had is this. You had natural gas was up 4.5%. Let's go look at natural gas. That's caught a bid. So it was up 14 cents. We're at 334. And it's got volume behind the move. Yeah, so good old natural gas, 363, well, 367's game. And, of course, we are coming into the winter. We'll see just how cold it gets. You had diesel was up at 2.4%. Gasoline was up 2.3%. Crude was up 1.8%. Beans were up 0.9%. You had gold up 1%. On the downside, we had hogs down 1.6%. Cattle was off 1%. Wheat was down 0.7%. No heavy deal there. Let's go take a look at, go back to the financials and go to JP Morgan Chase for a second. So JPM. That's not bad. There wasn't much movement in J.P. Morgan Chase. That was down 50 cents, small expansion of volume. Wells Fargo, WFC. This had an expansion of volume. Now, this was down a buck. You're at 51, 58. And I was listening to John Logan this morning. I guess let me just see this for a second. I believe that their own employees are suing them because of the, because they had so many shares inside their own IRAs, and of course they came across with all those accounts. Bottom line is that we'll see where that whole thing shakes out, but if we do look at Wells Fargo, that just went from 44 to 52. That's quite a run, that's for sure. That being said, you're coming right into the downdraft that had been created out there in August of 2015. You know, that's where we went from 58 down to 47. You know, it's good. That's a good start, though. That's a good start. That thing. Yeah, that looks to me like it's going to stand a consolidation, meaning that you very well can get the run to the top of that consolidation. Bank of America, we take a look at BAC. This came off with some volume. Yeah, so, you know, these next few days, folks, bottom line, it looks to me like, you know, we're gonna get a little downdraft here. The real question is going to be is that do you get it with volume? Because, so if we go over to the yen for a second, for all you gold and silver bulls, the correlation inside the yen had made a high on Friday at 113.90. It comes off that high last night with some velocity. We go from 113.15 down to 111.36. That also, when you get a yen that moves that way, bottom line is that most of the times the Nikkei comes off a bit, but the Nikkei only came off 24 points at 18,350. Yeah, that's a counter trend bounce. Last high out here has been 20,946. Amazon, let's go take a look at Amazon because, of course, what's going to happen now, Amazon back down 4 million shares. Yeah, it's off the high of 847. You're at 766. You stay right there, folks. This is Tom O'Brien. This is TFNN. We're going to come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. The Dow finished down 54, NASDAQ off 30, S&P's off 10. And I'll tell you, there's no doubt that we've come a long way. So check this out. You know, I saw this last week, folks. So you have, of course, all the ETF structures, and then you have the REITs. And the REITs, folks, a lot of the REITs started out basically in the real estate business. Now there's the REITs for just about everything. This REIT right here, you're going to love it. Getting into the weeds on the first cannabis REIT. Innovative Industrial Properties shrank the size of its planned initial public offering by 40%. What had happened, folks, is that they had filed for this a few weeks ago. They had planned on doing this IPO. Oh, here, let me read this. This is just an article that just came across. So, Innovative Industrial Properties shrank the size of its planned initial public offering by 40%, likely due to the market participants' qualms about owning marijuana-related businesses. One of the... Oops, where is that? 1 second. One of the primary concerns is the nomination of anti-marijuana Senator Jeff Sessions to be U.S. Attorney General. The long-term growth potential of the marijuana industry and therefore innovative industrial demand depends on increasing legislation of marijuana and increasing legalization of marijuana. As the Attorney General, Sessions could put a damper on that growth. So this is what this company does. Innovative Industrial, set to be the first marijuana-related stock traded on the New York Stock Exchange, is geared less for traditional REIT investors and more for marijuana investors. That group apparently wasn't able to support a $175 million deal. The IPO is going to come out as a $100 million deal. Okay, so let's see what they're going to do. I believe they're going to have buildings on it. Let's see. Innovative Industrial Properties plans to sell 8.75 million shares at $20 apiece, raising $175 million before fees. The company will use $30 million of the proceeds to buy its first property, which is under contract, with the balance creating a blind pool for potential acquisitions. Since it will be the first REIT of its kind, it is breaking many of the rules that REITs typically follow, including a lack of tenant diversification and creditworthiness and no in-place cash flow. This is pretty wild. Think about how hot the stock market is right now, that you can actually come out with a marijuana REIT. You're not telling the clients what you're going to get. This is crazy. So check it out. You're pushing 8.7 million shares out at $20 a share. You're only using 30 million of it. And what a blind pool, folks, is this. A blind pool means that you give them the money first, and then they're going to find something to do with it. Let's go through the rest of it. Because of its small size, inherent risk, and the fact that it's the first of its kind, it will be interesting to see if traditional REIT investors get involved. There hasn't been much of a REIT U.S. IPO market. In 2016, this would be the fourth deal of the year. Depending on the pace of the acquisitions, Innovative Industrial Properties may need to raise additional equity shortly after its IPO. About one-third of the $91.5 million of IPO net proceeds is earmarked for a $30 million acquisition that is under contract. The company has simultaneously entered into 2 letters of intent for potential acquisition of 5 properties totaling another $80 million, which would exceed its initial equity were the acquisition to be completed. Muted market interest in the IPO could hinder innovative industrial's ability to process incremental capital to fund acquisitions. What the heck are they buying for that kind of money? One second. That's what we want to find out. Okay, the cannabis market is growing rapidly, and innovative industrial properties is poised to take advantage of the need for real estate and capital. Legal cannabis sales are expected to, by AccuView Market Research, to reach $6.7 billion in 2016, up 24% from 2015, and $21.8 billion in 2020. Medical marijuana is legal in 29 states and Washington, D.C. As acceptance increases, the potential exists for a change in federal law, which would remove many of the restrictions the industry currently faces. It's not going to get changed. Federal law is not going to get changed if Sessions is the Attorney General, folks. That ain't even close. The BI Global Cannabis Peer Group is up almost 200% in 2016, easily outpacing the 5% gain of the S&P. Higher social acceptance, excessively driving marijuana usage. Relatively high marijuana usage rates among young Americans imply that future marijuana usage rates for the U.S. population as a whole may continue to rise. According to Gallup, 19% of Americans aged 18 to 29 currently smoke marijuana, a level well above the 13% rate of the U.S. population as a whole. Where do they get the baby boomers? Legal medical marijuana may get a boost from aging American regulations delay programs curb U.S. pot growth. U.S. marijuana sales may raise 29% on a compounded annual growth through 2020, according to revised forecast by market research firm AccuView. That sounds like way too much. There's no way it's going to rise by 29% a year. That's a lot. But hey, who knows? The real kicker here is I'm still trying to find. Okay, here we go. The cap rate on innovative industrial properties first acquisition for $30 million compares favorably with other more traditional real estate asset classes. The property will generate an initial return of 17.2%. It's pretty intense. With rents, and will contractually increase by as much as 4% annually. Current cap rates average 6.4% for office and retail, 6.8% for industrial, based on Real Capital Analytics data. Risk inherent in the underlying business drive a higher required return for the landlord. That would make sense. PharmaCann, the tenant of the initial acquisition, is not profitable, presenting one such risk to the rental cash flow stream. Innovative Industrial hopes to find other acquisitions that generate greater yields. It's negotiating another $88 million deal. There's an opportunity for cannabis industry to use real estate as a source of capital to finance their business. State-licensed cannabis growers and distributors don't have access to traditional financing, such as banks, because the business violates federal law and banking regulations. However, there are no such obstacles for providers of sale leaseback, such as innovative industrial properties. The cost of capital is high, but industry participants have few other options. Innovative Industrial Properties is led by executive Alan Gold, who brings instant credibility for the REIT. He was co-founder of Alexander Real Estate Equities and Biomed Realty, and was Biomed's chairman, CEO, and president from 2004 until 2013. 2004 IPO until 2016 sale to Blackstone. The cannabis property venture bears vague similarities to the lab space business Alan Gold helped pioneer, including tenant concentration and credit risk, and the lenders' unwillingness to finance the asset class. The management team that navigated those challenges may help investors' concerns. It's going to be pretty wild watching this whole thing shake out. Bottom line is that that's quite a rent structure when you look at it, though. You know, hey, we'll see where it shakes out. But I suspect you're going to hear a lot more about that, folks, because guess what? They're going to be kicking that out on the New York Stock Exchange. Who ever thought that you're going to have a pot REIT on the New York Stock Exchange? Have to love it. Dow Industrials are closed down 54, NASDAQ down 30, S&P's off 11. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finish down 54. NASDAQ was off 30. S&Ps are off 11. Gold caught a bid at up 1440 at 1192. And, folks, if you haven't test drove the gold report, great time to do it. Another edition just came out today. You can come over to our website at TFNN. You go to newsletters. You go to investment newsletters. You can test drive the gold report 30 days absolutely free. Let's go take a look at the XAU, the HUI. So inside the XAU out here, what do we have? Bottom line, you're up 256. You're at 81.69. Now, this came right back inside the higher range. So this is going to get really intriguing because when we broke down hard. We broke down November 11th. This thing broke hard. You know, we went from the 9th to the 11th. We went from $92.36 down to $77. Boom, bing, bang. Bottom line, you go sideways, no more sellers, come into lows, light volume, all of the above, and guess what? You just take off topside and go right back inside it. So that sets up the XAU to make this run up to the 92.36. Now, that also being said, if you want to see how these tests set up, it's pretty cool. We bring this back, and if I put this on a monthly basis, what you're going to see is that the run from January to July was extraordinary, folks. The XAU had gone from $38.36, bottomed out January, straight to 114. Huge run. Monster volume. Well, guess what we did? Okay, we came right back into and rejected this $73 area, which is the high of the second month, the second sign of strength. That number there was $73.81. You did 1.1 billion shares there. We came back into that with 926 million thus far. That means we're going to do probably about $1 billion. Bottom line, come back in, rejected lower price, had lighter volume. Now what it sets up is that, okay, now can you get up, number one, to the $89 area? We're at 81. And number two, are you going to build some cause? And is this going to be the run that basically gets you not only up to the 114, but the next run after 114, folks, is 135. The 98 area is where we broke down from in 2013. You know, we come up to the 114.71. If you want to see a classic, it's just about a classic, then gives it up. That's the supply line. The top of ice is that 135. That's in the XAU. We go into the gold bugs index, and what you're going to see inside the gold bugs index is that we're up $8 today. You're at 183. Now the gold bugs index has to get back inside 195. So bottom line, it's going to take a few more days for that to happen. It could happen tomorrow, you know, because what does happen with the HUI is that can move 10 points pretty easy in a day. If we take a look at the monthlies on this, what you're going to see is that you're going to see a nice test also with light volume. You're going to see that we came back 544 million shares. You're coming back into 663 million. So we're not going to be doing 110 million shares in 2 days. Bottom line, we got down to a price point of 171, and it rejected the highs of February. That's what it did. The difference here is this, is that the XAU is stronger than the gold bugs index, which is unusual, by the way, okay? Bottom line, you know, we'll see how that shakes out. What I expect you're going to see in the gold bugs index, this is going to make a run up to 221. And right now you're at 183. The real kicker inside the gold and silver markets right now is this, is that you can make a case that this is a counter trend bounce because we came down so hard. There's no doubt. The case I'm making is that no, this is the bottom because it did the testing, it's coming off it with volume, and it's the dollar. The dollar, folks, 100.600. Keep your eye on that. I think it's going to break it tonight. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking right here tomorrow. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.